Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Busy day today. From 8 to 9, we've got our earnings. We've got some M&A rumors. We've got some macro stuff, a lot to get to. Tim Courtney is our guest. He is the CIO of Exencial Wealth Advisors. He will join the show at 8:35 to give us his views on the market. That's the deal for the first hour. And then as Joel mentioned yesterday, trying something different today, or actually trying something older because we used to do this and we stopped. But from 9 until, I guess, until 10, well, we never went to 10, but we used to go to 9:45. But 9 to 10, we're going to do another hour, bonus hour. Joel will be joined by Sean Udall, the CIO of Quantum Trading Strategies, and Javier Hasse for a little bit. He is Benzinga's Cannabis editor, and they're going to talk through the open. So 9 to 10, and I'm gonna stop the recording, so that won't be available on the podcast, but it will be a bonus hour just for the live show today. 9 to 10, Joel, Sean, and Javier for a minute. So a lot to get to on our show. I do want to remind everyone about the upcoming Benzinga Global FinTech Awards. If an hour or 2 hours of us is not enough for some reason, you can spend all day with us. We'll be there at New World Stages in New York City. I'm putting the link in the chat now. Get 20% off your ticket with the promo code PMPVIP, fintechawards.com to learn more. Joel, what's happening here overnight?
Woo! We're going to start every show with the woo until we get Ric Flair to come on.
Woo!
Yeah, there we go.
The background woo.
S&P futures trading up $2, 3074. We pierced yesterday's low, not by much. So that's 67.50. That's a good area. We'll call it a double bottom for now, 67.50 to 69.75. On the upside, we've stopped at the all-time closing high of 75.75. You get through that, and then the all-time high is $10 above it. Tight, quiet range yesterday, and that's the way it's shaping up today. Crude tried to overcome the $57 level yesterday. Well, it did close above it, but back below it today. So we will be keeping an eye on that 57. What was the close from yesterday? 57.22. So crude, the high is 57.31, low 56.75. Gold up $4 at 1487.70. Silver in the red by 8.8 cents at 17.48. And Bitcoin, it's quiet. It's up $10 at 9,430. And this is going to be a special day because Triple D is not going to complain about his long-term portfolio.
Probably not, actually. I still find a way to look at it a glass half empty, but I believe, and it's hard because I'm always putting new money in there too, but I believe, even net of the new money, so if I back out the new money that I've put in, I believe I've made new all-time highs in my long-term portfolio. Why is that? We all know why that is, because I'm a value guy, and the value stocks have been taking off. Stocks like Hewlett-Packard that I have in my long-term portfolio have been taking off. Stocks like FedEx, stocks that have been under with P's of under 10. Those are the ones that have been coming into favor the last couple of months. We've continued to see this rotation. Same thing again yesterday. They're hitting the stocks with the high PEs. They're buying the stocks with the low PEs. I don't know how long this trend continues, but apparently Xerox is interested in this trend as well because we have M&A rumor here broke by Dow Jones last night. Mr. Israel, what is that?
Right. The rumor is that Xerox is considering a takeover of HP. Now, this is on the heels of their divorce, their 50-year marriage, 50-plus year marriage with Fujifilm. They're getting a $2.3 billion windfall from that divorce. And I guess they want to put that cash to work. The journalist said it would be a cash and stock deal for HPQ should it happen.
It would be an enormous deal. I mean, if you look at HPQ, the market cap $27 billion. So that's as of the close. So obviously the market cap's a little bit more there today because the stock's trading up 7%. They didn't say anything about a price, did they? I never noticed a price.
No,
just rumors here right now.
No rumored price in the article.
I mean, and obviously I'm an HPQ shareholder, so obviously I like this rumor, but just being said, it makes sense. I mean, HPQ is trading with a P of like 6 or 7 going forward. They are going to be a major player, if not the major player in 3D printing, which is still the future. There's still going to be a huge industry there. I know some of these 3D printing stocks have not performed and valuations were just too nosebleed at one time. But I mean, if you look at HPQ, it's the opposite of nosebleed valuation. The valuation's been in the gutter. It's 3.22%, trades with a forward P of 6 or 7. It's cheap stock. So maybe Xerox is looking, saying, hey, I don't know why, but obviously, there's going to be some synergies here as well with Xerox. So maybe this does make some sense. Stock is trading up $1.60 in the pre-market. I'm not sure I'm chasing it, but I'm already long it. I bought the earnings dip, which looked bad for a few days, but then started to turn around with this whole growth to value trade. And it's been performing well here for the last month. And now, obviously, we're performing very well this morning on the backs of this rumor.
All right, let's take a look at HPQ here. That is the subject of Xerox takeout. We're trading up $1.62 at 20. Just right here at 20 bucks. So very, very difficult to talk about this from a technical perspective until we get a price. Yeah. So we will just sit back.
It's still just a rumor.
And another thing, yeah, it is a rumor. Someone got really excited and go, whoops, and then they bought this up to 21. But I just want to point out something that Tiffany, right? Wasn't Tiffany getting taken out by LVH? And oh my gosh, 120, 130, 140. You don't hear anything. Right?
Still holding on, though.
It's still holding on.
But there hasn't been any confirmation there yet.
Yes. Yeah. So if you're in this, you got a target, 20 bucks or whatever, and you're looking for more, just be aware. I mean, the Tiffany's leaked a little bit. Nothing major here, but the high that, on that initial day, that's been the high of the move, 130.40. And the bottom area, 122.40. If you lose that, then you got a big gap to fill. But, when you hear these things with smoke, there's fire, you want to hear a price. And so far we haven't, but stay tuned.
Obviously, very credible source. Wall Street Journal breaks a lot of, so this isn't coming from, just some backyard Twitter account. This is from the Wall Street Journal. So it is obviously more serious rumor. There's probably something to it. Whether a deal gets done or not, that's still to be determined. Whether the premium is there that shareholders desire is still to be determined. I'm probably just holding on to it because I bought it just for the 3D printing aspect, and the stock is cheap. And I like my value stocks. And then, in the last month and a half, I've been paid for that. It's been a rough couple of years, I'll tell you that, though, because my value portfolio has very much underperformed, what some of the other portfolios that are full of growth stocks have done. I just, it's a style of my investing. I like to know that I'm investing in something that is, that's got some value to it. I've always been that way. Maybe it's a CFA background. Maybe it's, the Warren Buffett reading his approach, but, I've always invested that way. So anyways, I'm sticking with HPQ.
Do you have to do anything to keep up your CFA certification? Is there any continuing education or anything like that?
There's 20 hours recommended. You don't have to do that, but I would get that from so many different sources, from just basically educated, you can take courses, you can do readings, you can do lots of different things. I do so much with market structure, equity market structure in a year that I would probably easily cover that. And obviously, I was very involved with the Capital Markets Policy Council for 6 years before my term ended a couple of years ago. And I'm still fairly involved with the CFA Institute too. I've even helped to do some of the, edit some of the curriculum as well. So I've always been very involved. The last couple of years, I've not been involved as much with the CFA Institute, probably because I have 2 kids, and my 2-year-old, it makes me very busy between this show, between my trading, between my 2 kids. I don't have a lot to do, but I always wrote for CFA Magazine. I haven't done that in the last few years, again, because of the kids. But once the kids get off to school, maybe I pick some more of that stuff up.
We got Miket says he's bringing the Benzinga show into his dental surgery at 9:30 on Friday. We're not doing it on Friday. We're just experimenting with today. So,
and I wouldn't recommend that. Also,
good luck with the dental surgery. And we're there for moral support, even if you can't listen to us. But
maybe we'll look to expanding other days, but we're just going to try it out on today with Mr. Sean Udall. He'll be on at 9 o'clock, and I'm sure he'll have some.
Sean's got to be liking this value trade because Sean's a value investor too. So we'll continue the conversation obviously along with Sean after 9. But I mean, Sean's in a lot of value tech stocks there, and I'm sure some of those have done well too, like HPQ. So you know, and let's just go with this theme a little bit longer. I mean, this is why I was so bearish Peloton on the show yesterday. I mean, we said this dotted the I's and crossed the T's yesterday when this was trading over $26. I couldn't get a locate, so I couldn't short it. If anybody had it, or if somebody else got a locate, congratulations. You know, hopefully you made some money, but you know, I don't talk that bearish about a stock very often. I called it, you know, a bicycle with a TV attached to it. And here's a stock that doesn't make money. Here's a stock with, you know, that just fits the bill of the stocks they don't want to own. And it's a stock that's trading up 7% on a good report, but whatever, they're still, you know, losing money. So I didn't think the report was that great. And it literally, you know, after we got done that piece, you know, within a half an hour, it had given back all the gains, and then obviously went down another 7 or 8%. So you're talking about, you know, it's a tidy 15% fall since we ran our little bearish segment on it just at this time yesterday.
Timing is everything. All right, we got some earnings. We have, what else do we have? We did our little.
We got to do the match. Let's go to the earnings, Joel.
Okay.
It's a good, and it's again the same exact theme. They don't want to own stocks with nosebleed valuations that, you know, aren't making money or are making very little money. And I think Match dots the I's and crosses the T's on this one too. Yes, they are making money, but it's still, you know, 50 cents. You can do the multiple on that pretty fast. It's trading with a pretty, you know, sky high PE. So it was a good report. Again, well, give us the numbers, Spencer, before I digest this.
Yeah, the earnings were good.
They looked fine.
EPS 51 cents versus 42 cents. Revenue of 541 versus $540 million. So they're making money.
I was ready for this turn in this one. So it traded up $2 or $3 on the initial report, and I'm like, they're going to turn around and whack this. I had this in my head already that they're going to turn around. Even though it's a good report, they don't want to own this kind of stock right now. They don't want to own these high flyers. They don't want to own these former Momo names. And so I was looking, and I'm like, okay, Match is going to be really fast, but I could see that somebody was bidding up IAC, and IAC obviously owns a ton of Match. It trades off of it, and Match turned around and it started going down. I smacked the IAC short, and obviously scalper blood and me cover way too soon, but you know, it's down 19 points here now. So there's obviously the relationship that, you know, I'm aware of. So 2 reasons I can make money on a trade like that. 1, I'm very aware of the relationship, and 2 is I'm feeling that they're not liking the Momo stock. So I'm biased to, you know, sell into the pop. And that's, you know, I actually sell in the Match. I went and did the IAC because I waited until Match started to turn. I didn't want to hit Match down $2 or $3. Obviously I could hit IAC almost flat. It was actually bid up at the time, so, which was crazy. But anyways, scalper blind me covered way too soon now.
Where'd you get it?
220, over 222.
Oh my Lord.
Yeah.
You covered at 215.
No, I covered way too soon. I covered very quickly. Well, what happened was Match went down 3, and then it rallied all the way back up again. That's chopping around. Like, I take the money. And then I'm like, no. I see Match fall. Like, I got to get this back, just short back on. There's nothing to be had. You guys hold through that little chop period. So anyways, it was a good call by me. I felt it outright. I did not know Match is going to fall 13% or 17%. There's no way to know that. I just had a feeling that it was going to go red and continue to go down a little bit just because these stocks are out of favor. So, and we say this all the time, sentiment towards the stock matters more than the earnings itself in a lot of cases. And this is the same story with Match. Okay, report. You know what? They don't want to own this kind of stock right now. This will turn. This whole growth to value trade will turn again. We've seen value to growth for the last 2 years. Well, you know what, guys? It's value's turn here right now. It's been their turn for the last month and a half. Does it continue for another month and a half? Does it continue for the rest of the year? I don't know that. But I'll tell you what, and Kramer said it last night, some of these value stocks are ripping so far now. I mean, you look at FedEx, and I own that in the long-term portfolio. I mean, the stock is up, 15, 16 points in 3 trading sessions. Karen Feinerman, pointing out URI. I mean, just ripping from 130 to 150. I mean, they want the value so bad that they're willing to pay up for it now. If you're buying these value stocks now you're kind of getting late to the party. The time was when we've been talking about it a month ago. So there's still some stocks that haven't went yet. Macy's, started to break out yesterday, but you're seeing it across the board. If the PE is under 10, it's moved back in favor. Even General Electric, yes, they had earnings. Yes, they were good. But yes, it's the low PE that's attractive. Ford has taken off. Ford had a garbage report.
Woo!
The last 3 days, Ford's been taking off here too.
$9.
So, yeah. So it's just rotation. It's natural rotation that continues into the value names. I don't know there's no way to know how long this goes for, but it can turn on a dime. So you got to be careful. I would not be paying up, now buying FedEx at 165 when you could have bought it a week ago at 150, and you could have bought it a month ago at 140. I mean, you're talking about, really chasing here now. But, if you're long these stocks, I'm going to ride it for a little bit. Yeah, they look great example, Spinner, Caterpillar. That was really the one of the main turning points, wasn't it, Joel? When Caterpillar had that disappointing earnings report, and it was down $10 on the earnings report in the after hours session, and it turned around and went green. That's telling you they were done selling these cheap PE stocks. They were done selling, the value names. And that was kind of the turning point. And we've been straight up in all the value names since. So, the Caterpillar was almost like ground zero for when this trade really, really turned to value.
Dennis, do you look at, I know I don't, AAII sentiment survey?
No, nothing.
Now, because you got sentiment, you're looking at sentiment, right?
I'm looking at feel. Like sentiment, you can just tell by price. You don't need an indicator to tell you sentiment. If you're not in the markets, maybe you need an indicator. I'm in these markets, 10 hours a day. I know what's in favor and what's not in favor by trading, and seeing what they're buying and what they're selling. Price tells you sentiment. And you can see that this, the media can preach it, and they catch it 2 or 3 days usually after we do. I catch the sentiment turn very quickly because I'm in the market. So, I can feel, hey, they're hitting these kind of names here right now. I mean, if you want a real indicator, Berkshire Hathaway is always a fantastic indicator for how value is doing. A lot of value stocks in it. When Berkshire is up there making new all-time highs, value names have come back into favor to a certain extent. He doesn't go and buy, stocks with PEs of nosebleed PEs. At least he typically doesn't, unless what was the stock that he bought that his helper bought and it wasn't Warren's pick?
That was Teva.
Was that Teva? Okay, well, that's again trying to be a value stock, but that's a value trap. So,
right.
but Berkshire Hathaway is a good gauge for how value is doing, and Berkshire Hathaway's been taking off in the last couple of weeks too. Not surprising.
All right, so we did I didn't even do tacticals in match. Dennis, you are really getting me off. You're really
go to the match where it's off the lows.
Yeah.
What are your thoughts here?
Well, there's a quiet buyer in here. I don't know if they're short options or short the stock, or they've been waiting to get long the stock, but you plunged. Your pre-market low is under $60. Your pre-market low comes in at this couple brackets after, let's see, 56.78. So let's call it. There's 3 lows under 57. So I don't know. I just don't think, just the way this chart's looking, I think, the more you pull back to that 57 to 60 area, I think you find buyers. I don't know if they're short the stock or trying to initiate a long. Not really seeing anything on the month. On the monthlies, I see 58.68. So I'll just give you a zone, and I'd say 57 to 60 is buy zone for me here. Trying to bring in a short. Where this thing can go on a pop, if you're short this thing and you just think it's going to go down to $50 today, the rebound high has been at 62.26. So you're going to be buying on, you're going to be lifting offers if it gets above that area. And UAC, same chart, or IAC, same kind of chart here. You did bottom. You're on your way back a little bit. Pre-market low comes in at 192.50. So a lot of ARB going on with this stock. And
between IAC and match, it's all ARB.
Yep.
It's all risk ARBs. And, it's hard. You can't trade. And people say, I'm just going to become a match IAC trader. I mean, for the most part, high frequency traders got that whip pretty well during the day. But on an earnings report, I don't know why, but they're scared of it. They're scared more and they're not as active. And that's why you can get an opportunity to do a little bit of the ARB. And I like trading around the earnings reports. I've always liked trading sympathy. And this isn't a sympathy play. It's a pure play because they own so much stock of it. So there's understanding relationships. Like, this is my bread and butter. This is how I make my money. This is how I've made, honestly, my whole life, really, from a financial standpoint, is not technical analysis, not, looking at the charts and trying to find where support and resistance in the trend is. It's from relationships and understanding the relationships. I know when TLT is down, the banks are typically higher. I make money because I understand that relationship and I trade that relationship. I know there's a relationship between Match and IAC. I know there's a relationship between Celgene and Bristol Myers. It's called risk arbitrage. But, there's also relationships between all your food stocks. GIS and Campbell's have a relationship there. Lowe's and Home Depot are paired up. There's a relationship there. There's opportunities within those relationships. And when those relationships get out of line in the short term, a lot of times they come back in. Now, we know if you're talking pairs, it can get trendy and it can start to blow out. It's different things. But when you're talking about a Viacom versus CBS, that's risk arbitrage. CBS is going up a buck. Viacom is going to follow suit to a certain extent, percent for percent, because they're getting taken over. That's pure risk arbitrage. There's opportunities in that trading.
Harry wants to know how you find these relationships, and I think it's his 20 years sitting at a desk.
Well, I know what they are. I have them all written down on a piece of paper, but there's places. There's like RiskArb. Isn't it riskarb.com or one of them? There's RiskArb places where you can find all the deals that are on the table. But it's also, those are the easy ones. I mean, those are the ones that everybody knows about. But there'll be relationships that form. I mean, I've traded Roku Shopify for a while here now. There's no actual fundamental relationship between Roku and Shopify, but they're both highly regarded Momo names. And that's why I'm more concerned about Roku into this report. Shopify has been in the gutter here for a while and looks like it's going to break down. I have a little piece in the long-term investment portfolio, which it's back down to where I bought it, and I'm kind of like almost feeling like getting rid of it. But I have so few Momo names that I want to have some exposure, and it's got the whole Canadian thing, which is another story we've talked about before. But I mean, I look at Roku. Maybe Roku's going to have, rip on the report, and maybe it's going to be, I think they'll have decent numbers. The question is, do they still sell it anyways? I don't know.
Another thing too is that, and I know you keep an eye on, is that with some of the drug stocks, and like sometimes good news is good, good news is bad news for somebody, like the whole
the
Merck.
Keytruda, Bristol Myers.
Yeah, exactly.
We've seen that a lot of times where Merck comes out positive Keytruda data, and Bristol Myers is a competing drug, and Bristol Myers will get hit. That's not so much now. I mean, Keytruda is so big for Merck that it seems like Keytruda is solving everything. So anyways, it seems to be positive data about Keytruda every other week, but there was a correlation there for a long time where when Merck came out positive Keytruda data and would rip up $1.50 on it, Bristol Myers would sell off almost the equivalent. So I traded those relationships too. I mean, just understanding all those relationships give you an edge. Those are real edges. Like looking at a chart, and here's, something for all the technical guys out there. I mean, you can say, oh, I know how to analyze a chart better than anyone else. I mean, you got 6 million people looking at the same chart. So there's going to be a few other people that are probably going to analyze it in a similar way. Is it really an edge? Do you think you've got the edge over the other 6 million people that are looking at the charts? I'll tell you, there isn't a lot of people. There's some people looking at relationships, but there's a lot less relationship-based traders out there than there is technical-based traders. I'm not poo-pooing the technicals. I use technicals. We talk about them on the show. I like support, resistance, and trends. But, that's one tool in my toolbox. I really believe, and I've said this for a long time, that traders that focus just on technical analysis struggle to make money in the long run because it's not a real edge. I mean, people can look at charts and, they can look at it the same way. And it's good to know that the trend is your friend. It's good to know you can see that value stocks are coming back. But I'm almost like deriving, what I feel about, the sentiment towards a sector from the chart, as opposed to making a call on a stock that has a pretty pattern.
That's why I just think bringing in Spencer, I'll let you go right after this.
Okay.
Bringing in Sean, he does his own analysis. I mean, he loves his technicals and stuff, but he backs into the technicals by doing the fundamentals. He comes up with his own earnings, his own projections. Sometimes they're quite different than the street, but he looks at the fundamentals and what the companies are doing. So I think
that's his first tool.
Yeah.
So he's not even looking at a chart. He's first looking, is there value here? I mean, he's kind of like me from a valuation, and Sean's a little longer than I am. Sean will hold swing. He's more the swing trading environment where I'm doing a lot of scalping. I'm doing a lot of short-term trading. I do trades around the open and efficiencies. We've talked about all this stuff. My bread and butter is day trading. I've never done a lot of swing trading. I do them sometimes, and I think I do a pretty good job with that. I just, it's not a focus for me. I like to, I trade overnight. I like to trade the open. I like to trade the close. I like to trade all the little intricate relationships against each other on a daily basis. And obviously I do my long-term investing. I just, you can't trade every time frame efficiently all the time.
Exactly.
So swing trading has never been a focus for me.
And the one thing I'll say just with regards to relationships is, there are a lot of platforms out there, and we've had some on our show that, claim to be able to identify these relationships for you, and maybe they can and maybe they can't. But there really is no substitute, as Dennis is saying, for sweat equity. There's no substitute for just time spent looking at charts and the market. Ultimately, I think that is the best tool you've got, better than any platform or technology that can or can't identify trends and correlations for you. I'm sure they're out there.
100%.
But there's no substitute for just looking, spending the time. That's ultimately your best tool.
100% correct. And that's why I was saying, in a world where you have, free trading through your Weebles, free trading from all your obviously a lot of your retail platforms here now, why not get your feet wet? Why do paper trading? I don't understand why we do paper trading anymore at all. Get in there, get a feel, because when you're trading something on paper, you don't have the emotion attached to it. It's not your real money. When you get in there and it's your real money, you're getting feel. That's experience, that matters. And I've always said, when you first start trading, don't expect to just come in and make money right away. If you do, it's a bonus. But usually it's more luck than anything, or you might just be benefiting from an overall bull market. I mean, right now the market's going up. If you're primarily a long trader, you're probably going to make money just by pure luck. But, you get into these and this is a good example. I started trading retail in 1996. And 1996, 1999 was just a huge bull market. I thought it was a genius. I was making money on every single trade. I'm like, I'm awesome at this. Then I started at bright 1999. I realized I had no idea what I was doing. I was just lucky because the market was going up. So I was just benefiting. I'd buy Amazon and, I'd sell in the afternoon. I'd buy Amazon at 100 and I'd sell in the afternoon at 120. And I thought it was a genius. I mean, it was just a huge, ridiculous bull run. So I was just benefiting because everything was going up and I wasn't shorting stocks. But then you come in and you realize you're starting to learn from market makers, learn different strategies, learning relationships, learning different things. It's like, holy cow, I was lucky I was in a bull run. And what happened to a lot of those traders in the year 2000? Well, when the bubble burst, a lot of these guys are primarily long, and they realized, hey, they weren't actually extracting, alpha from their strategies. They were just benefiting from an overall up market. And a lot of these people lost a lot of money from 2000, 2001. Same thing happened again in 2007, 2008. So if you're primarily a long trader, you're going to make money if the market's going up. You got to ask yourself the question, how do you do if we eventually do get into a bear market, which is inevitable, we will do again. Are your strategies okay? Are they sound? If you're primarily just writing puts, are you going to put too much stock that you could actually, risk your account? All questions you have to ask yourself. I know I do very well in a bear market. My best years were 2001, 2008, and 2009. Yep. And some people don't like it when I say that, but it's because I'm trading relationships. I'm short, long. I'm market neutral. People don't understand market neutral. They don't even understand how you can make money. But on any given day, I usually, in my day trading portfolio, have an equal amount of longs and shorts, at least hedged, beta hedged and dollar hedged as best as I can. So I'm doing that to take away the market risk. As I don't care what the market does. I care that I believe that, this stock is going to underperform relative to this stock, or, it's lots of different things. So.
What was that relationship? Harry keeps on asking for the relationship website, Dennis. I did that riskarbs.com.
No, I don't know.
Okay.
There's one for all the deals that are out there.
Oh, okay.
There's a deal site. I went to it before. We might have some of this in the pro too. Do we have some of this?
I'm trying to think. What's it called? Gosh, not deal book. Not.
I write them down, so when I have a sheet of paper. It's literally all the stock deals. Now the cash deals you don't care about. Like a Fitbit is useless. You don't care about that one because you already know the price. It's the all stock deals. Like Celgene, Bristol Myers. That is point for point, not percent for percent. But for every 50 cents of Bristol Myers goes up, Celgene goes up 50 cents. So, that's just understanding, because the deal is actually, I believe it's $50 in cash plus 1 share of Bristol Myers for every share of Celgene. That's why you get that. But then there's other deals like Viacom CBS is percent for percent. So when CBS goes up 2%, Viacom will typically trade up 2%. Now, if there's specific deal news, those relationships can go out the window, and that's the risk. That's why it's called risk arbitrage. If all of a sudden the merger, antitrust coming in, they might kill the merger. You can see those relationships blow out in a hurry. But on any given day, if there's no deal news, those relationships tend to hold.
Now, all these deals that you mentioned are on Benzinga Pro. If you just filter by M&A, you can get every M&A.
There you go.
But that also includes rumors, it includes deals and
Well, we'll clean up the pro. We'll put a request in the pro just to put the actual deals in there. Why don't we do that?
Well, they are, but there's more to it.
But maybe they can filter it just by deals. Like
Right.
there's probably a way to do that they can just quickly write, our coders can just quickly write it up, and then
Right.
that would be a very handy tool. So I never even thought about that. Propose that. So
I'll pass it
yeah,
along.
yell it over at Brentster right now.
I'll
All right,
pass it
we'll
along.
yell at Brent right now.
And if everybody else has ideas for the pro, we always take ideas. So if you've got something that you're like, I'd like to see this in the pro, let us know. And we can put a request in there. Obviously things take time to code them in, but if we think there's a lot of people that'd be interested in that, we can add stuff to the pro.
Yeah.
Just real quick, Roku. Boy, oh boy. I don't know if you're going to be trading this thing or going into earnings here, but 150. I mean, there is a wall there. You made a little bit above it. I'd call it 150, 148. That was a high of the move. You backed off there. You also had highs in 151, 152, 153 area in September. It's a little bit over the 50% retracement with doing a quick calculation. So if you're holding this thing into the report and you're looking for a pop, and you see anything in that 150 to 153 area, I mean, there were sellers there before. I think there'll be sellers there again. On the downside, some lows at the 128 area. But once again, it's all about the report, and we'll see what happens. But, man, over 150, that's what I see as major resistance.
It's all going to matter about the report.
Yep.
And if they come out and really blow it away, it could be one, like we're almost far enough where we've seen it happen so many times that they've been hitting Momo names, like, on good reports, that everybody now expects that to happen. And it could go the other way. So you just got to be careful. It's not necessarily always slam dunk. Once something happens, 5, 10 times in a row where they're hitting, not even, sometimes it's 3-4 times in a row. Sometimes it go the other way. So I think I'm completely hands off on Roku. I'd be biased to sell spike on it, but if the earnings really blow it away, it's a stock that's loved enough that it could continue. So I think I'm just hands off on it.
They've got a history of earnings beats, just so you know.
Oh, I think they're going to beat. Are they going to beat by enough? Are they going to pull a match where, okay, the report's pretty good and then it comes down, or is it, going to be a case where they've blown this away, this is serious, and it's going to rally? It is a loved stock.
Right.
So
S&P's just stuck up and we made a new high here. 75.75 was the other high. 76.25. I mean, it's just one of these incremental rallies here. Nothing great. Bonds are up almost a stick here. Really not much else going on. 833. You want to cover our second stock of the day?
Well, I think they like these discussions.
They love it, Dennis. I don't know.
Let's go to the value stocks. Spencer?
Well, we had Merck just come out. What did
Merck say?
Is that value enough for you?
What did Merck say?
Merck beat on their EPS and beat
Merck wasn't scheduled.
I see their earnings out right now, so
I don't think Merck was on my list. You're right. Was Merck scheduled, guys?
Let me look in my.
I did not see Merck scheduled.
I don't think I did.
Unless I missed it. I did not see Merck on my list.
Well, nonetheless, here we are. EPS beat and a sales beat for Merck.
Boy,
Stock 51. I own it. It's one of the biggest positions still in my long-term portfolio. It had taken over my long-term portfolio, and sometimes you just have to adjust. I bought a pile of stock back when it was $30. I think 28, 31, 32. Held it for years, and it just went up so much that I actually started lightening up. I've lightened it up multiple times, and it's still a huge position just because it went up so much. It's a good problem to have. But sometimes you just don't want a stock taking over your portfolio. So that's why I have lightened up. I still got a huge position in Merck. I'm going to probably stick with what I have left. I've way taken more than I've ever invested in it out of it. So anyways, 83.45.
Wait a minute. Wait, Merck isn't out just now. I'm sorry, guys.
Yeah.
I don't know what I'm saying. Merck.
Well, no, I'm looking. What is that, BZ? What is that?
Yeah, I don't know what that is. I apologize. I'm not sure what that is either. But Merck was out. They were out last week.
I thought they were already out.
Yeah.
Sorry,
some glitch in the system.
Some glitches happen. Merck is not out.
Glitch in the matrix there. I apologize. It's 8:34.
I do see it trading higher though.
Yeah, I don't know what that's about. All right, 8:34. Let's do one more quick before we go to our guest. Actually, you know what? You want to do Walgreens? Maybe going private here.
Oh.
Yeah, let's talk CVS earnings with Walgreens.
That too. Okay, CVS, they had earnings and Walgreens might go private. CVS reporting this morning for real. Q3 adjusted EPS $1.84 versus $1.77. Sales also beat and a guidance raise for the year, raising their full year EPS guidance, and they cut their operating income guidance.
What's that $70? See how I look at this right away and I go, okay, I don't care what the technical, I care about the chart. I want to know what's in the book. And CBS is something that is a New York legacy stock that typically has some major players in the book. Let's go look at 70.
Can you see that far? Because
130,000 shares at 70. That's huge. So what does it do? Did it get up to 70?
Nah, not quite.
Not quite.
69.90. So someone
These are not coincidences, though, that these turn around on these. There's players that look in the book and they're like, okay, I was going to take a lot of money to get through 70, so I'll take a free ride. I'll take a nice, look at the short side here in front of that. So it turns there. Go ahead, Joel.
No, it's someone. How do you handle the stock if the company wants to go private? I think you just wait for the highest possible price and then
you hope.
You dump it. I don't know. That's a great question. All right, we're a minute behind with our guest.
All right,
here.
let's bring on our guest today. A new guest will join us. Tim Courtney. He is the CIO of Exencial Wealth Advisors, and he's got a pretty good macro point of view. Although I'm sure he has a take on what we were just talking about with our growth versus value conversation. So, Tim, good morning.
Morning.
Do you have any? I'm not sure if you're listening, but we were just talking about growth and value is in vogue right now, but that could turn on a dime here. Do you have a take there?
Yeah. Well, I mean, except for just a few months, really in late 2016, after the presidential election, value stocks have been on a kind of a historic, underperformance run against growth stocks, and it's been so consistent that growth has outperformed really since the middle part of 2014 is when growth really started to take over. You had the energy sector starting to falter, and for about a year and a half there, most of the S&P had negative earnings outside of tech and a few other growth areas. I think that it's probably time that value would start to outperform, and you start to see a little hints of that over the last couple of months. So I don't want to say it's time for value to start outperforming, but the underperformance has been so large. It's likely that probably over the next 5 years that value comes back. You start to see price to earnings ratios in the low the low teens, approaching 10 for some value areas, and the odds are, I think, that they will probably outperform, but I think it's too early to tell.
All right. Well, in the next 5 years, I don't know if I can wait that long. I don't know if our portfolios can wait that long either. But in any case, let's talk about.
Are you saying for the next 5 years, though? Aren't you saying not even in the next like okay. You think this performance could continue for a while, correct? This growth to value trade. Yeah,
I do. It has outperformed recently. You never know when a trend and when it turns, but I think likely it will outperform for a while when it does.
All right, so Tim, we've talked about here. Obviously, we're sitting here at all-time highs or damn near close to it. It doesn't matter every dip; they just come in and buy it, and I guess there's money on the sidelines. I mean, is that the only explanation here?
Yeah, I think that's a big part of it. I mean, we are flush with cash, and so there's a lot of it out there. And I think the other thing about aside from cash being so plentiful is the fact that there's just so few options out there, so few alternatives. If you look at obviously interest rates are below 2%, with inflation just below 2%. You can't have money sitting on the sidelines and expect real returns, and that money's got to be put to use. If you look at real estate, real estate yields are in terms of REITs, they're in the 3% to 4% range, very, very low by historical standards. And then you've got equities. So yeah, I do think it's the cash, it's the lack of alternatives that's going to have people coming in and buying on the dips as they have. I mean, we almost reached a 20% correction. We almost reached a bear market in the fourth quarter of last year, but within a couple of weeks, we had already recovered probably 10 10 to 15% of that downturn in late December and the first several weeks of January. So they'll certainly happen. The pullbacks will happen. We have about 3 to 4, 5% plus pullbacks a year. We've had 2 so far this year. We'll probably have another one in the fourth quarter, I would guess. But I do think that the recent phenomenon of cash flooding back into markets after a meaningful pullback is probably here to stay for a while until there are some real alternatives out there.
Tim, is there a particular asset class, or if you want to get more specific, sector or industry that you have your eye on for the next year or so?
Well, value would be one of them, and so you've got a lot of sectors in that area, financials, some industrials, and so I think value likely will do better. The other thing I think investors should consider, and this has not done well over the last 5 or 10 years, has been some international equities. And when you look at international equities trading, the entire market trading in the low double digits between, say, 10 and 14 PEs, you have currency risk there, but I think if you feel like you need to hedge the currency risk, I think getting exposure to those international assets, which are trading at very low prices, would also be a good asset class to consider.
Tim, what constitutes a trend shift for you, right? I mean, we've talked about growth, value outperforming growth here, but everyone has their own different definition of a change in trend or a change in direction. So, like, when you're looking at different markets, what constitutes a trend shift? How do you determine for yourself that the trend has changed?
Yeah, we don't, with our strategies, we tend not to make big shifts in our managed portfolios based on where we see trends moving, and so we don't really have a process for identifying them and acting on them. We generally utilize valuations more frequently than trend analysis, and and that does involve longer time frames, to be sure. But when we see valuations, approaching levels that you rarely see, and I think we're probably reaching that point in terms of value and growth. It's not value and growth. Their valuation spread is nowhere near where it was, say, in 2000 during the dot-com bubble. But it's the spread between those two areas, say in price to book, is pretty wide. There's been very few times in the past where you've seen the spread this wide, and so we would estimate, moving forward, that value would outperform. And we do that analysis across asset classes such as international, REITs, and so on. And so I think valuation is typically the key to expected returns moving forward. And it's been, it hasn't, the value piece has not worked recently, but in most time periods it does.
We're on the line with Tim Courtney. He is CIO of Exencial Wealth Advisors. $2.4 billion under management. Tim, I'm not going to ask you about any individual positions here. And we're just talking a lot about market mechanics and technical analysis. And our belief is, it's the institutions, the big buyers, and the big sellers that make the charts, that make the markets. Just like on your average position, like if you decide to go into stock XYZ and you're gonna, donate, or put a certain amount of your funds into it, like how long? I mean, I know you're just not going in to buy, 200,000 at the market. Just talk to us about, how you get into that position, how you use technicals, if you use any, and then the duration of time it takes for you to get in and out of a large position.
Yeah. We do have an individual stock strategy. We call it our select strategy, and it's about 40 to 50 U.S. large cap names. And so typically the the volume on those shares are easy enough for us to move in and out of as needed. We don't really need to utilize any kind of special trading strategies. Every so often, we will use algorithms to spread trades in over the course of several days. We do have another strategy that we call our opportunity strategy, which are more small and mid-cap names, and those are names that we feel like are future select names. They're future high-quality names, but currently they have lower market caps, they have lower trading volumes, there are more risks with those companies, and those are the ones that we typically need to watch the mechanics of more closely. And those might take a couple days depending on the size of the company, but generally we've completed our trades within a few days. So because most of our names are, say, $1 billion or more in market cap, we haven't, and most of those are several billion. We really haven't run into any technical issues up to this point.
All right, Tim, Courtney, thanks so much for the time today.
Yeah, thank you. Appreciate it. All
right, 8:46 here. Guys, where are we at? Anything good?
Continuing creeping higher, up 4.5 handles to 76.50. So current high 77.25. Just a nice little run up here, going into the open.
All right, more earnings.
More earnings.
Is that the plan? Let's do some. Let's do like cyber. So let's do CyberArk, CYBR. This morning, Q3 EPS big beat, 65 versus 47 cents per share. Sales beat 108 versus 103 million dollars. Q4 EPS guidance is higher than estimates. Q4 sales guidance is higher than estimates. Full year EPS guidance is also higher. Full year sales guidance is also higher. So good guidance across the board and a nice earnings beat for CYBR.
Tough one. I mean, this isn't one of those typical like Momo names I think about, so it's not a natural fade, and it's a really good report, and they do make some money. So I can't just like throw, okay, like a Peloton just dots all the I's and crosses the T's for a short. I don't see it there. But I do see a couple of resistance points just above 120. So I would just say anywhere near 120, I think you start to slow down.
Yep. Someone was asking about that earlier. At the time they were asking, I'm like, hey, it's at the highs of the pre-market session. So buyers are still lurking out there. And then just kind of the way we do our technical analysis, very similar. I went back to, and towards the end of August, I see a 119.80 high. And then I see a pair of highs just right at 120, 150. So, and that's just for today. If you're looking for some potential targets, it's already up 1141. There's a bidder in there. They're buying. They're taking the stock up. And right now on the daily charts, I see that 119.80 high, then the pair of highs at 121.50.
Let's jump just away from the earnings just for 1 second. I want to talk Uber. The lockup yeah, you know what? Sometimes these trades are just that simple. You short the thing ahead of the lockup and you collect on the day, that the lockup expires. And I mean, here we are, it's down 5.5%. I believe there's also an offering here, if I'm not wrong. There's something going on.
Too, on the same day that
well, it could be insiders just trying to get out, but there's some blocks.
Wow.
Priced here. I mean, obviously disappointing earnings.
Yeah, this is still shaking out from earnings here.
It's still shaking out from earnings, but totally with the lockup too. I mean, this is the day it expires, right?
Yep.
So we're down another $1.50. So there's not a new headline. This is disappointing earnings. Now we're down another $1.50 on the lockup expiration. It's ugly. I don't know. Stocks making new all-time lows.
Yep. Joe Dagger just brought up, and I don't have the Adidas chart in front of me, but look at this sleepy Nike chart here. Holy moly. Look at the matching ranges here. 89 to 90, 50. You've been trading in that area. You're up 51 cents. Made that all-time high. You pulled back. I don't know. This thing, like, if we could clear 90, 50 here with some momentum, a good strong market.
We got a rating today too. Raymond James initiated that as a buy.
Really? Initiated as a buy now? Whoo! I don't know.
I have a trading position, so I'll limit my comments, but I'll just say there was an RJ position there.
Yeah, I'm just saying clearing, 90-50, real quiet range here. Wow, that's a bull move up here. But that's what I'm looking at. You see all those highs, 90-41, 90-53, 90-56, 90-34. Those are from the last 4 sessions. Still haven't cleared that area in pre-market trading. That's what is there anything at 90? Well, it's not exactly 90.
We've kind of cleared her out, so I can go look at the book quickly.
Yeah, there's nothing there. It's kind of like a secret algo there.
It's one of the hidden algos that just keeps refreshing.
Yeah, anything over 950, bip, 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 hitting.
It does happen.
Raymond James is out hard this morning.
Yeah, talk about the note.
They are bullish. A lot of retail reinstating Under Armour at Outperform, giving them a $30 price target. Nike, we talked about Outperform. Their price target is $100 there. Lululemon, strong buy. I don't know what
they're starting Lululemon now.
Yes,
at a strong buy.
Yes,
Sometimes you see these cases where an analyst left and they replace them with a new analyst, and then they restart coverage.
I don't know what the difference is between a strong buy and Outperform, but here we are nonetheless. And it got a $275 price target. So Lulu, Nike, Under Armour, Foot Locker as well. Outperform, $70 price target. The only sell rating here or underperform is Dick's Sporting Goods. They're underperformed there, but bullish on Foot Locker, Nike, Under Armour, and Lulu.
All right, going to the retail there. That's interesting here ahead of the holiday season. I guess a little Thanksgiving late this year, so that kind of delays Black Friday a little bit. But man, I don't know.
It's ahead of the earnings reports, with the exception of Under Armour. It's ahead of earnings season for retail.
Let's just talk Under Armour. I mean, it shrugged that day off yesterday on Monday. The Sunday evening news dump, but real nice. If you're going to get above, I'm looking at the UA as opposed to the UAA. And you're at 1650, yesterday's high, 1657. Then you open up to a $2 gap, $2.30 gap here. So let's see here if Under Armour can get in that gap. And then MCD got off the mat yesterday. I won my bet on Monday.
You're going to win. It's going to be like the Twitter one. You're going to win it by that, like one little candle, and then the thing's going to rip here now.
Okay. All right.
What about the Grubhub? Because we saw those like 8 downgrades in one day. That was the low. That was the low. And it's been climbing since. We saw a little bit of insider buying there last night. I don't have a position on this yet, but I don't know. I think this is a stock that could show some life here today. There wasn't huge insider buying, but there was multiple directors buying, including the CEO. I'm just trying to look at the amounts. Yeah, this is the CEO.
Yeah. So 1, 2, 3, 4, 5, 6 insiders bought.
6 insiders were disclosed buying, and one was the CEO, and it wasn't a huge position. I believe the CEO bought a few thousand shares.
If you were an analyst on that day and you saw like 7 other people were downgrading it, wouldn't you say, oh no, I'm gonna upgrade it?
Part of the herd.
Yeah.
They would have been, that analyst would have been the right one, because we've come back from those lows, and you know what? Is this one, you throw her in the long-term portfolio and forget about it? Like, I haven't analyzed this from a fundamental basis, but this stock was $150 stock.
Don't be a hero. Don't be a hero.
Don't be a hero.
Well, sometimes okay. But it stopped going down, Spencer.
It stopped going down.
Is it calling a bottom if it's not going straight down? It's went up for 3-4 days in a row.
Do you get...
I think there's a trade in here. I think there's a trade to 40. So, and I'm not saying, you go in here and you buy it at 36 today, but I'm not saying you don't either. So I have no position, but I kind of like it for a trade here. I think there's room here in Grub.
Do you get getting Taco Bell delivered to your house for, an extra $2.50 surcharge or something? That's what Grubhub does, right?
Yeah, they do.
Among other,
Uber is competing.
Not
with
just
Uber
Taco
Eats.
Bell. I don't know why you're so.
What kind of? Do they make money? Does Grubhub make money?
Let's find out. I believe they do.
I think they make money, don't they?
Let's check real fast.
We got a forward PE on this thing?
Yeah, they're profitable.
They're profitable. You know what? I'm not buying it, but you never know. I never say never. I don't have no position right now, but I'm interested. We'll say that in the GRUB.
All right, S&P still up 3.75 handles. We got about 5 minutes, and in 5 minutes, Dennis is going to go bang on the keyboard there until trade the open. We'll be joined by Sean Udall, and he did a little preview tweet of what he's going to be talking about. So 5 minutes left here. I looked at the ratings today, Dennis. Did anything really catch your eye? I didn't really see nothing really.
There's no big names in there. We went through Lowe's has upgraded Credit Suisse. That's notable because Lowe's is a widely traded stock and is trading up $1 here in the pre-market there. And it's one that's held up. This is a stock that's not far from all-time highs. So LOW looks interesting. I'm looking at the downgrades and trying to see. I do see Weight Watchers catching a downgrade. That one's obviously just chasing a bit, although the stock was actually up yesterday. That Weight Watchers turn. No, I'm sorry. It's the earnings were last night. So I was looking at the chart. Its stock's down $6. So this is
That's
chasing.
a big move. Whew.
Yeah, off the earnings there. WW. It was last night they reported. What were the? Let's do the Weight Watchers report. WW International. They don't like being called Weight Watchers.
Oh, yeah, exactly. So EPS 68 cents, beat by 2 cents. Sales missed 348 million versus 352 million. They did raise their full year EPS guidance. However, they raised it by about 8 cents. So I don't know if that's I don't know if that's the reason why.
Stocks had an impressive run. We know it was $100. I think you can forget about $100. I don't think it's getting there anytime in the near future or ever. But $16 a low back in May. It's come up to 37. It's time to cool off a bit. I mean, anybody who bought this in the last 6 months made a lot of money. It's time to cool off a bit. Still, how much money they make? What's
all right. So this is the trade. Weight Watchers is down. Wendy's, Papa John's both up. That's the trade today.
So dieting is out. We're full on
dieting is out.
Ourselves.
Peloton is out. Dieting is out.
You know what?
Dieting is out of favor. Eating really bad for you food is in favor of Wendy's. I guess you can get something healthy at Wendy's. You can get like a salad or something.
We drove. There's a Weight Watchers on Orchard Lake, a big office there. I drove by there with Lisa the other day, and she said there's like a new diet out. She said it's gonna crush Weight Watchers.
Oh yeah.
I can't. And that was before the report.
What was she saying? Keto?
Yeah,
that's not new.
I got a friend on the
Not
keto
new?
too.
It's not new, but it is becoming more
Keto
popular.
and that's just dumping out the carbs.
It's short for.
It was the old Atkins.
It's short for ketogenic. It's not a new thing, but it's becoming a little bit more mainstream.
What do you do on that diet?
You just dump the carbs out. So you eat fat and protein, no carbs.
You know what?
But Atkins was like that. Remember Atkins? That was the same thing, wasn't it? Spencer, you remember that?
Yeah, I remember Atkins.
It was the same thing. It was dump out the carbs.
You know what? A couple people I know that have been on some diet, and what they do is they don't eat all day, and they just eat one meal. For dinner.
That's called intermittent fasting.
Yeah. Well, Spencer, you're up on this stuff.
I'm up on this.
It's like the snake diet. You only eat once a month, and
I would eat too much at that one meal. That's what
me too. I eat too much at all my meals. That's my problem.
Try surviving Ramadan. You guys wouldn't be able to do it. Don't eat when the sun's up. But okay, 8:58.
Imbalances. AT&T 145,000 to buy. CVS 80,000 to buy. Mickey D 60,000 to buy. Those are all notable here this morning. Square, which reports after the bell, has 40,000 to buy. Still have it in the long-term portfolio. Although I'm kind of nervous about it going in. I'd be
nervous too.
I'm nervous about the Square. It fits that bill of selling all these high, growth names / ones that don't make a ton of money. But I still feel like Square could grow into that valuation. CBS 32,000 to buy.
While, Dennis, you've been saying it for a long time.
It hasn't gone anywhere. It's been 2 months. It's still at the same price I bought it. So I don't know. It's not going to grow into it in 2 months, Joel. It's going to take a couple years for it to grow into that valuation. But I like Square. I like the technology. I'm a believer in Dorsey. And I think, obviously, I'm only at and this might be the tell, I'm only at a half size position.
That's the tell.
So that's the tell that I'm not that confident. All right.
That's it. All right.
Hey, Dennis, keep your Zoom up in case you want to pop in. We're going to be on.
Maybe I'll pop in after the open. I got to go trade the open. If I slow her down at 9:45 or 9:50, maybe I'll pop in and say hi again. We're going to extend a show 9 to 10. Bring in Sean Udall.
So
Are we
here,
going to play the music
The
again?
value tech guy. There's not a better day to have Sean Udall on than the value tech guy. Is he coming? I want to say hi to Sean before I leave.
you want to say hi to Sean real fast? All right, Dennis, you can say hi to Sean. But
Bring him
before
in.
I'm bringing Sean on, but before I just formally transition, I'm going to end the recording right now for our podcast, and we're just going to do the show live here. And I do want to remind you all about
Maybe the podcast wants the recording to still go. Why do we want to stop?
we're just doing
Dennis, we'll talk about it.
bonus live
All right.
stuff here.
Oh, it's bonus live. Gotcha.
Bonus
Okay.
live stuff here. So real quick though, Benzinga Global FinTech Awards, November 19th. Spend the day with Joel and Dennis and myself. If you have any questions about that, email premarket@benzinga.com. I dropped the link to the Eventbrite in the chat to get 20% off. The URL, fintechawards.com. The promo code is PMPVIP. Now, as I do that, let's see if Sean Udall is here. Sean, can you hear me?
I can hear you. Can you hear me?
Yes, but I can't see you. Got to get that camera on, and we can do it.
Camera should be on.
It's funny,
It's a value tech guy that doesn't know how.
There he is. There he
Look
is.
at that. Look
We
at
never
that.
get the video of Sean. There's Sean.
Now we do. All right. Dennis, you got to say hi.
Yeah, I gotta say hi. I had to say hi to you, Sean, before I got to go trade.
Hey, Dennis, how you doing?
But you're replacing me for this hour there, so
I feel
I'd say
I
with big
feel
shoes to
privileged.
fill, but they're not that big.
I don't know. Pretty big shoes.
And obviously, you're going with the Dennis wardrobe, a T-shirt. So that's
He's
okay.
got the fancy picture behind him, though.
Yep.
T-shirt, unshaven, just for Joel.
All fancy. It's early out there, though, so we'll give you a break on the not.
It's a little better though. Daylight savings time. I'm on Mountain Time, which is my favorite time zone.
So you're only 2 hours behind now.
Exactly.
This is your favorite time of the year when you're on Mountain Time.
That's right.
All right, Sean. So we were just talking value stocks. We'll bring you in because I know you like your value tech stocks here too. So this market, you must be liking this kind of market here with this.
I
move to
do.
value.
The only thing that's clipped me hard is Twitter. But yeah,
Right.
I like the market. There's just a lot of stuff to buy in a market that everybody else seems to be really worried about. And you know what? If I owned Apple and Facebook and I don't know, cloud stocks that I used to be short, I'd probably be worried too. But there's just a lot of value. So I have no problem finding stuff to buy. Plus, I'm pretty bullish on the market. It's been a while since we've been on. I think I was pretty bullish. I think I'd kind of gone from bearish to bullish the last time I was on. Joel might remember better than me.
You got, I don't know when that was. You gave me one of your, I'm feeling bullish. And I can't, it was long before we broke out from new all-time highs. I can't remember exactly what it was. I could look back at my phone, but very good sentiment. And actually, I was going to ask you about that too, about, we've had this big run here after being, bullish here. Are you seeing anything under the hood here that, maybe looking for a turn here, or things still looking, besides those individual stocks that you mentioned, anything that you
Well, I think I just caught the tail end. You guys are talking about Square. Square is getting very interesting to me. I used to love the stock, and I actually still love the company. It's just the evaluation, but it's been clipped pretty hard. I mean, it's definitely in a buyable range. I just don't know. This is a tough quarter. It's a coin toss quarter, I would say. I would really be, in fact, I was a buyer of Square and had some Square calls around the last lows. So if it were to get clipped 15%, I mean, I'd love a 20% pullback. I don't think it's going to drop that much, but something like that would get me outright bullish on the name. I think the thing about Square, sometimes you got to kind of I think Dennis has talked about this too. For some of us that own 50 or 70 or 100 stocks, maybe small positions, but we own a lot of stocks long term, Square is just one of these companies that is just going to be a lot bigger company in 3 years and 5 years and 10 years. And, if you're a professional trader, like I am, you can't hold everything forever because you have to monetize gains and you have to pay yourself. But to the degree you can hold some positions and things, again, like Splunk, Workday, Apple, Facebook, Square, that become much bigger companies, it just helps. It helps everything, helps your portfolio, builds gains, all that kind of stuff. So Square, I just have a hard time believing Square won't become a much larger company in a number of years.
Oh, we're on the line here with Sean Udall. He's the CIO of Quantum Trading Strategies, joining us here for a bonus hour here on Pre-Market Prep. Sean, we do have a guest coming on in about 5 minutes here, but we don't have, when you're on the show regularly, we don't have time to go through a lot of different stuff here. Can you just talk about your morning routine a little bit? You look at a lot of stocks. I know you do your own independent research. Are you the kind of guy that, like, after the close, you do all your stuff, you wake up in the morning, and then just give us a little bit of your routine and how you get in and out of these trades?
That's probably more so I think what you were just going to finish say, so West Coast traders have to kind of trade differently. But yeah, that's a good way to think about it. So I mean, I get up anywhere from an hour and a half to 2 hours before the open, but I do, I don't know, I'd say probably an hour to an hour and a half of work kind of every night, and kind of think about, okay, so what's reporting, what's reported, what's going to report tomorrow morning, and kind of have a list. Like today, I'm looking at cars. I'll be watching that in our first half hour. It looks like print looks pretty good to me on that one. That CARS. I'll be looking at a couple other companies that reported. CYBR had a big report, but it's not low enough for me to buy. So it's mainly earnings focused, and I'll scan, I don't know, anywhere from 100 to 200 charts usually every night too. I mean, I can scan 100 charts quick. I mean, maybe 10 minutes or less.
So you're looking for something just to jump out at you, or do you have your pre-designed indicators? Like, because a lot of us for Dennis, like sometimes we'll both pull up a stock, we'll both talk about the trading action, and then he'll just take the word, like, what, like, to me, like CYBR. Let's use this stock today.
Sure.
It's not low enough for you to buy, right? And you're not going to short it, right? It's ripping up $11. Is really at this point a good report.
I mean, could be, not to cut you off, could be an intraday short, but I don't know. I don't tend to talk much about that because posting a trade that somebody's not even going to read about until I'm out of it doesn't really make much sense, for my subs and stuff like that.
But what would you look at? I mean, analyzing the pre-market action here, up 11.20. I have no idea what the straddle was going for. I have no idea, what you had to pay. So
that's big. Yeah. I mean, just a quick look looks kind of like resistance should come in around 115 to like 120. So you could almost just split the difference. But that's a good report. I mean, they put up some really, really big numbers, and there's been lots of fear sort of about declining cloud momentum, which I do think we have declining cloud momentum. But that doesn't mean every one of the companies is going to kind of fall off a cliff. And a lot of these companies are still putting up really good numbers. So yeah, I mean, CYBR is tough for me because I was a buyer really cheap and I was a seller kind of dear. Even stuff I'm going to trade short term, I usually want to have either a long or short bias on it. So in other words, I mean, this is something I think about kind of pre every day. So stocks like a Square, I would have a long bias on Square. And I would say, okay, so is there a trade in front earnings? Is there a trade after earnings? What's the level? Like, I don't know, even today, you get me Square in the 59s. I may take a pre-earnings trade, like a multi-hour trade. We're getting a little wonky, but like, hey, if there's a lot of fear and there's a lot of people dumping Square, I might take a trade into the close, and I might even hold a little bit through the print, something like that. But for me, it's more kind of valuation. I have a buy list that comes first, and then it's levels. But when I'm scanning for charts, it's almost, I mean, I have lots of rules and I have lots of conditional arrangements, if you will. But a chart just sort of stands out to me. I think so. You kind of asked, does something just kind of stand out to you? And the way I would almost tell people to look at charts, try to look at them quick, just like page through a bunch of them, and then go back through them again, because sometimes just what your eye will see quickly, you'll digest better and you'll actually find better things, as opposed to getting overly mechanical and saying, oh, hey, it's above the 5 EMA. Oh, look at the MACD. Look, I mean, I always call this, analysis paralysis. People they get too buried in trying to have multiple technical indicators line up. That's a tough way to go about things, I think. I think you got to develop a feel, put it that way.
All right, it's 9:09 here in 55 seconds. Do we have Javier around?
2 minutes.
2 minutes.
2 minutes.
Okay. All right, we'll have Spencer dial him up here. Okay, we got a question here from Spike. And folks in both the chats here, questions for Sean or myself here. That's what we're here for, an extra hour here, a little education. Does Sean take into account in his analysis short interest or short ratio in stocks?
Oh, yeah. In fact, we could go into, that's a great question right now. We could go into a phase, and we saw a phase like this once this year already, where high short interest stocks produce some whopper short covering rallies. This quarter, we have one, which is still kind of ongoing, which is Best Buy. I'm sorry, Bed Bath & Beyond. Bed Bath & Beyond is kind of a slow rolling short covering rally. But we had a phase, I'm trying to remember, was that April? Can't remember. There was a phase this year. We had about 2 or 3 weeks where stocks with high short interest were just ripping. Like the oil sector, I mean, there's a lot of shorts in the oil patch right now. So anyway, I do look at that. But it only kind of works well in certain types of the market. So like a market that rotates the value, and a market that kind of acts like we're in right now, like maybe the IWM's trading a little better, maybe the S&P is a little short-term overbought. Yeah, so maybe short covering works, but I definitely look at it. I pretty much know that number almost on all my key stocks. So I think it's pretty important, but it's not, I think some people overemphasize it. Just like there's 2 things I think people overemphasize, especially when they're learning to trade: insider buys and sells, and short interest. So everybody, I think, always goes through a phase where, oh, hey, if I can just identify these stocks with massive short interest, I can make lots of money. Well, a lot of times the shorts, they're 80% short, they're right. And the other one is insider buys and sells. So like one thing where insider selling means nothing pretty much is technology, because these guys get paid a lot in stock and they're always selling stock. So insider selling doesn't really tell you anything, and they rarely buy stock. And then when they do buy stock, they usually buy it too high prices. So, everything has to kind of work with other indicators, put it that way. You can't kind of just rely on one thing. That's a great question. It's a question that might be more important into the fourth quarter and first quarter too.
All right. Do we have Javier Hasse on the line? Javier, how you doing? Spencer is saying 1 second here. Just say hello, Javier, when you can hear us.
Hello. There you go.
All right. Welcome to Benzinga's Pre-Market Prep Show, Javier. How you doing today?
Doing great. It's been a while since I joined you. 4/20 of 2018 was the last time I visited you.
Oh, really? You keep? Oh,
It was.
Yeah. Okay. So it's been a while, huh, since that's happened, and there's a lot of changes in the industry. And
Oh, yeah.
I'm looking here. So April, that was before you had like that major blow off top here, up to 45.40 in September. But before we get into the sector and the do's and the don'ts of it, just tell us a little bit, what you do. You wrote a book, right?
Yes, sir. Start your own cannabis business. This was a couple of years ago. I now serve as the managing director for Benzinga Cannabis. Since April of last year, we've been growing nonstop. And I might have to close a window because there's a lot of noise.
Do you have the show running? Like when you're on the radio.
There you go.
They say turn the radio down.
Back then in April, we were at very bull markets, and now, as most of you know, cannabis markets are in kind of a rout, but slowly recuperating.
Okay, so let's talk about different sectors. One thing Dennis just preaches about is just like low barriers to entry and competition coming in for these companies. many more licenses going out in Canada here. Is it the growers? Is it, I kind of look at cannabis. I look at more, I try and identify, on the medicinal end, talk about, the growers and the producers and the distributors, and just kind of break down each of those and some pros and cons for each.
Yeah, definitely. So most people, or a lot of people thinking about cannabis business, or about cannabis and finance and investing, tend to reduce the industry to just growing, transporting, or selling cannabis, basically weed. And that is not the case so much, right? While it is true that certain areas like cultivation are starting to be a little bit saturated, have become very capital intensive, and there's a lot of competition, but also relatively high barriers to entry when it comes to the capital needs. There's a wide array of subsectors in the industry that are still pretty profitable, that are growing. There's, for instance, a US-based company that does software that trades on the NASDAQ, right? It's not just the growers anymore. It's not even the Canadian growers or the American growers. There's anything from services, there's investment firms, there's agricultural technology, there's security services, right? So while it might seem like the space has become saturated in some segments, this is not true for every one of the segments in the industry, right? But
so what's your favorite? Yeah. What's your favorite? Would it be like medical? Would it be the growers? Would it be the technology? You mentioned that stock that's involved in the technology and on the NASDAQ. What stock is that?
That is Akerna. It's one of the few U.S. companies that trades on a major U.S. exchange. That's NASDAQ Kern, Kern. There's also another U.S. company called Greenlane that trades on the NASDAQ. It's an e-commerce platform that is GNLN. And then most of the large companies trading on these two major exchanges are Canadian, whether it's Canopy Growth, Afria, Aurora, Tilray, the ones you've heard about the most. To be honest, these Canadian producers trading on major exchanges are definitely safer investments because of the disclosure requirements that these major exchanges entail, but also valuations are not particularly well justified by fundamentals. A lot of the growth is already priced into these stocks. So in my opinion, they're not ideal investments. I'm not saying they're bad. If you want to buy and hold for 5 years, I'm sure they will go up, right? There's demand, and these guys started early and have a global footprint. So even if the Canadian market is not big enough for many investors, these companies all have global projections and assets around the world. But having said this, I do like multi-state operators that are US-based cannabis producers that are in several states. Because of federal illegality, they cannot be seen as one licensed producer as in Canada, but there are a lot of different state-specific entities working within or under the umbrella of this larger company. All these.
Let me interrupt you here for 1 second here, because we got to let you go in just 1 minute. A lot of talk about this and why that people are not looking for these companies to succeed is because of the illegal pot industry and the amount that's generated through that. Do you think that, I don't know about, is the quality or the price, do you think that that's just going to be a long-term, impediment to these growers moving forward here? Just the black market.
Mm-hmm. Well, that is definitely yet to be seen. It really will depend on how legal players implement their strategy and how governments move forward with legalization. Right now, illicit markets or what they were calling legacy markets now are continuing to thrive despite legalization, because legal price points are high, because there's very stringent regulations when it comes to what you can sell, what you can say, how you can label it. So definitely this is helping illicit markets thrive. But I don't see that thrive, over the longer term. Imagine, cannabis should become in a few years like any other product.
Okay.
You don't see a lot of people buying cherry tomatoes in the black market. At a certain point, it's just not convenient enough. You just go to a supermarket and you have like the normal tomato and then the organic and then the super organic, that they brought from Italy or whatever. And that is the range. And if you can go for something that is more affordable, you can go for the best quality, but you won't go to a back alley or an unlicensed retailer to go buy a tomato. Okay. It's not worth.
Sean, do you have anything for Javier here? We're going to let him go in a minute. I know you've been following that PYX, Sean. That's been a real dog here. Any questions here for Javier before we let him go?
Yeah, well, I mean, is there a point at which, like, is there a valuation sort of level for let's just say a CGC or a Tilray, because those are names that more people know. Yeah. Is there a sort of a valuation level where you kind of say, okay, this is kind of getting ridiculous and the growth more than justifies the current valuation? Because that's something I always kind of look at. So I was just curious what your take on that was. If there was sort of like a valuation floor, it doesn't mean the stock drops or stock doesn't decline further, but the valuation is so compelling that, hey, look, from here, every 10 or 20% lower, is that just that much more attractive?
I mean, it's hard to tell, because again, the difference between valuations and fundamentals up to very recently was so big that now even a small correction still seems like that the stocks are not quite fairly valued when compared to other industries. Having said this, I do see there's a relatively attractive entry point for these specific stocks you mentioned at the time. But again, it would be a buy and hold kind of situation. And this is what I recommend to most people looking to buy cannabis stocks. Don't go and trade them. They're too volatile. You will go crazy. If you want to do something like that, go for an ETF. There's 5 of them. There's YOLO and there's MJ and there's CMBS and there's THCX. There's people sitting there all day looking at these stocks and how they're moving and trying to rebalance portfolios. If you try and do that on your own, you will lose your hair. You will stress out every day. It's not a fantastic scenario unless you have a lot of time to assess each one of these trades on a daily basis. So to your question, there is no floor right now, but it also seems like these stocks have nowhere to go but up over the medium to long term, even though they might continue to experience volatility over the shorter term.
All right, Javier Hasse, he's the Benzinga Cannabis enter, joining us here on the extended hour of Benzinga's Pre-Market Prep show. Thanks, Javier. We'll talk to you again.
Thank you for having me.
All right, SP futures creeping up here. Pulled off. We hit 77.25, now back off. Sean, before we did to that segment, we were talking a little bit about your daily prep and how you approach the market. So moving into the close here, I know I'm kind of S&P 500 eccentric. I know you like to try and you look at the NASDAQ stocks. I don't know how closely you follow the NASDAQ futures, but what do you look at as far as the futures or on your screen? What stocks you're going to be trading or trimming today or observing? Just talk to us a little bit about your setup.
Yeah, so the futures, I can't say I ignore them because I look at them every morning. But like I know there's some obsessed folks out there that kind of watch the futures at night, and if they're down a lot, they worry, or if they're up a lot, they're giddy. I would say like the overnight futures have very little bearing on how stocks trade the next day. I think you'd agree with that. Now, if you're a good futures trader, that's probably where thin markets provide opportunities. As for me, I look at them. I guess I use them for whatever the indication I can. I don't put too much stock in. And the biggest thing I look for, and again, we're kind of heading into one now, is we might be going into, I mean, we're definitely short-term overbought, but I'm still bullish. I'm just kind of, you know, I hate to say this, but this is, you know, sometimes the crowd is right. And I think when I was talking about this a couple months ago with you from much lower levels, I just didn't really see a repeat of last year. In fact, I saw too many people were worried about a repeat of last year. A lot of cash on the sidelines. Now it almost seems like people are kind of scrambling to get invested. And it's hard to believe that you could say that, hey, like there's a lot of big professionals that are underinvested with the S&P at 3,000 or 3,100, but it kind of feels that way. I mean, what do you think? I mean, that's just, that seems to be the reason that we keep going higher. Is I guess I would call it positioning. What's your view on that?
I mean, it's just, I mean, the trend is your friend, right? And as much as I try and, fight it here, everyone was worried about the trade war. That seems to, it's not resolved yet, but it's coming past. Trump's not tweeting as much because of, the possible things going on with impeachment here. You had stocks, you had the big boys, you have the top two components in the index, Microsoft comes out, great earnings, blows away, new all-time highs. Apple, big run into earnings. Anybody that thought that, you were going to have an earnings fade in that. So I look under the hood and I look at the big stocks. Then you get it, you're getting this rally here in oil. So boom, that's picking up the, the oil sector, the bank stocks that have been kind of late to the party, right? They, interest rates aren't going up, aren't going down, but the value trade goes to the bank stocks. So let's, before we go into the open here, we got a couple minutes before that. We had a question earlier in the show about, is it too late to get into the bank rally? Now, I know you're a value guy, you're a tech guy, so I kind of stretching out, get out of your wheelhouse a little bit, but do you want to comment on the bank? First of all, do you own any banks?
I do not own a single bank. I'm trying to, I do have some Citibank in like some kind of plan somewhere. So, it's kind of one of these leftover 401ks, if you will. And I just left it there because it was vested stock. So that technically, though, I really don't. I was last almost bought one, the name of which is Morgan Stanley. Morgan Stanley used to be my second largest position a few years ago. Yeah, $40 felt pretty good. I messed up on that. That'd be a 20%er right now. And honestly, I'd probably be taking it. So if I would have been smart enough to buy the Morgan Stanley at 40, at 48, I'd be ringing the register. But I don't mind them. I'd be more like willing to speculate on, hey, some of these beaten up oil stocks. I kind of think they've hit floors, valuation floors, which I think are compelling. Stock could go a little lower. Still lots of cheap stuff in tech. Some of the growth names have had pretty big declines. But yeah, as far as the finance stuff goes, it's almost, the express, it's almost like if I owned them, maybe I'd keep some, but it's kind of like too late to buy. Okay. Might still be okay to hold them and ride them, but I kind of think you're getting kind of late to the party on the finance stocks. By the way, I'd say the same thing about Apple and Facebook. I think those rallies, I'm not saying they can't go any higher, but they're looking pretty extended to me.
So why does Apple look extended to you?
Well, so here's the difference. The last time Apple was, I think my last short on it, which worked really well, was I want to say 242 or 240. Now I'm not short it here. Again, if I just think it could keep kind of grinding higher into year end. It feels like people are out of position, they're chasing, there's almost like forced buying going on. So it's one of the names they're buying. But I mean, this thing's just, it's just sort of massively extended. There's lots of, it's hard to find a technical indicator that's not, let's just call it, grossly overbought. And, here's the biggest thing I look at in Apple. It's, every time I've ever bought Apple, the stock has just been outright cheap. So it's either outright cheap on price to sales or price to earnings or price to cash, net cash or price to cash flow. A lot of those, like really like Apple's super attractive valuation, a lot of those attributes are basically out of the stock now. So now Apple's got to kind of compete in the, again, it has to kind of morph into what Gene Munster has talked about. Like, could Apple trade more like a Clorox or a Procter & Gamble type name? Which, by the way, that was one of my theses for owning the stock in 2013. I thought Apple was stupidly valued and should be trading like a Procter & Gamble with a PE of 18 to 20. Well, I think their PE is about 18 now. So it's not like it's not really trading with the Procter & Gamble kind of world. So it just, here's the best way to say it. I just think it's, I just think there's a lot more things that are more attractive. I think that's the, that's the best way I'd say it.
Okay. All right. Real quick here. Let's go live to the markets. And we had a pre-market high at 77.25. Not much up there. The number I liked on the upside this morning was 75.75. That was your all-time closing high. And doesn't look like they're going to lift me at that level. Something should have been doing in the pre-market. The opened up 73.50. Sellers have come in here. Pressing. The SPOOs are now looking at the low from yesterday, and the low from yesterday comes in at 69.75. We haven't hit that yet. So a little bit of a battle here. That pre-market fluff there being sold here at the open, trading in the red. Still haven't reached the low from yesterday. I just want to cover a few stocks here that we talked about on the pre-market show. That's CYBR here. We're looking at it in relation to the pre-market trading, and I think you gave a pretty good level there. You said, and I kind of liked what you did, because I think I try and get too numbery, and I try and give the exact level. And you looked at it and you said, 115 to 120, right? And
that was it, my man. And by the way, we can pull up some charts here in a minute too, but keep going.
Okay. So boom, so if you were buying that thing, let's say you're a momentum gap up guy, you're buying that thing, and I'm pretty sure the open was 118. You pretty much realize within the first 30 seconds that you're wrong on that trade, right? As it goes against.
I suppose, but the guys I know were probably buying it post print and probably catching it a few points cheaper. But yeah. If you're buying it at the open, here, let me pull up a 10-minute chart. Yeah, I don't know. I mean, but this is one of those ones we're just going to have to see. What's the mood of the market? I mean, can this thing kind of retake day highs and push to 120 or above 120? Next resistance is 122.
I mean, right now, I'd say right now the likelihood of that is very, very low. I mean,
yeah, it feels like they're going to fade it. I mean, it feels like they gapped it up. Yeah.
Yeah, there was the gap. Just think if you had the 1.9, 110, 111, 112, 113 calls or something. And think of that. No, think about that.
Yes.
Fire tomorrow. Like, I got to get out here. But what I would look for this one right now, it's CYBR, which I'm not in, no position. Quick $4 drop here, right? 118 to 114. I like to see what happens at 116. I know I use my 50% retracements here, but the longer it takes to get this thing back over 116 and challenge that high, looking for more of a fade in that. Speaking of a fade, the S&Ps are fading here off the open. We did yesterday's low was already traded through during the pre-market and after hours, so that's not as much significance. The pre-market low is what our target is here now, 67.50. So far, we hit 68.50. have some room down to Monday's low and Friday's close here. So if we lose this this pre-market low, looking for at least 63 and a half, 64 even there. Let's also take a look at Nike. Okay, so we talked about all that resistance at 90.50 in Nike. It did get an or initiation with a strong buy today. Well, those sellers that were there at 9.50 a few days ago, the last 3 or 4 days, they're still present here. You printed 90.64 off the open. 90.72 was your high. You've backed off now. I think if you did get a short off in that area, what you want to do is see it go unchanged here. And I think that would be your first support point, unchanged on the day in Nike. And let's talk this HPQ. Is that something that you're involved in at all?
I don't do much work on that. I follow it a little bit, but I haven't done a whole lot. Weren't they, isn't Xerox sniffing around HPQ right now?
Yep.
Yeah.
They are. I mean, that's the rumor. The juice did pretty good in the pre-market trading. Let's see if I can find the pre-market. Oh, someone got real excited in this one, and
they're fading that one pretty good too, Joel.
Yeah, it's, you know what, that's a, you know, when I think about a stock like HPQ, and you look at that, like how much volume does that thing trade in a day? Traded 12.5 million, averages between 10 and 12 million. On those kind of stocks, I kind of think of like, wow, like how much stock would it take to move that stock in the regular session? And it would take a lot to move it $2 or $3 here. And plus you also have to satisfy all those sellers in the book. And that's a thick stock. A stock closed at 1840. You had sellers at, at 19, 19 and a half, 20, 20 and a half, 21, 21 and a half. So the designated market maker has to fulfill all those orders on the open. And if he wants to, take a piece of it, he has to satisfy those orders. He has to have enough buyers to satisfy those orders. And then, maybe he'll go with the fade on something like that, can take a little bit of stock for himself. Sean, did you take control there of the?
Oh, I just set it up to share, and I got HPQ up. So if you want to show, I didn't mean to take control. I just went to share my screen.
No, it's good. It's enough people that's tired of looking at us here. Let's see.
But look at that hard fade, man. You can. I don't know if people can see the cross, but I mean, this went right to resistance. I mean, this literally went to the penny, right to resistance. 21.54 pretty much.
Right now, so you don't you don't have the pre-market chart. You're not looking at the pre-market chart.
Not on this chart.
You're showing the daily here, and what
Sean's looking at. I can flip through any time frame you want.
Okay, no, that's fine. But a little after the fact, Jack here. But look at July here. Look at the middle of July to the end of July, and is this crazy? Look at this. Look at all these highs. I'm counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 highs in a row between, let's call it the 2150 area. So if you don't think that those people that are out there for 14 days in a row are not going to be back up there on a windfall like that. I didn't even look at that level. I wish I would have given our.
Now here's what the bulls want. They want 20. What is that? 24 and higher. This was probably an interesting little chart. Here's a stock. Do you know this name? The DXC.
DXC. No, I don't.
DXC Tech. Okay, so this part, I would argue some of the best parts of Hewlett Packard ended up in DXC. Now take a look at this chart. Here's the 5-year. This was a big winner before. So this was sort of a big M&A growth story. Look at what this thing has done. Now this is a cheap stock. I'm not long this, but I am looking at this name. You got some good assets from Hewlett Packard. The old Computer Sciences was in this. A very, very cheap price to sales ratio. Anyway, but see how it's kind of firming. It's
we talk about a chart like this all the time. And
Yeah, I like this chart.
and it's, let's say you're picking it up here at 29 bucks. There's buyers. There's some institutional buyers in here, right? And it's just the question of, is it just, bringing shorts in here? But if you're buying into this 29.20 area, and I know you would give it more room, but 26 has been the low of the move, 26.02. You got to figure if you do fall back, that is going to be supporting the issue. Give yourself a little bit more room, 25 even or something to stop. But what do you like? So now what would you do? Would you go to look at the, when they report next and, anticipate something, a position ahead of that? Do you pay any attention to analyst ratings at all?
I do. I mean, what I like to see is I like to see a change in tone or a change in character from the analysts, especially if I believe they've been wrong and now they're realizing that they need to move, right? So, I mean, every analyst in the world, I think, has downgraded this stock. What I'm doing on this one specifically now, I've just started kind of looking at this again. I'm pretty sure they're due to report. So my play on this is I'm just going to wait for the report. I hope they haven't reported yet. I don't think they have, but I'm going to wait for the report and basically almost kind of hope they kind of kill it one more time post report. However, one of my rules, if you put some bad news in a stock and it doesn't go down anymore,
yep,
that's usually a pretty hard floor. And so either one of those is fine with me. Here's where I would have a hard time. Let's say they report okay and it goes to like 34. Okay, it's still fundamentally a very cheap stock and I can value this thing to 50, no problem. But I don't know if I want to buy it at 34 when I just could have bought it at 29. You know what I mean? So sometimes I'll just move on. Sometimes I'll just pass on the trade and say, okay, I either missed the trade or it just didn't set up to what my parameters. But like I would like to kind of hope they have one more bad report, frankly. And then maybe it doesn't retest the lows on a bad report. That gives me more confidence that the lows are in.
All right, let's S&Ps, and then we talk about on the pre-market show, we talk about pre-market trading and pre-market levels and stuff. You had a pre-market low of 67.5, right? So we came down to that area. So far, we went down to 67.25. So on some occasions, what I will do is I will, especially if there's a tight range overnight, I will try and use the pre-market lows and pre-market highs as either like a fade if the market sells off. Perhaps this is a lower risk area to buy, or what a much better trade has been working has been, you come in, you're up 12, 13 handles, you're 2 points away from the pre-market high, boom, you go through the pre-market high and you're off to the races. But so far, that pre-market low is holding here at 6.25, 67.25, 67.5 was the pre-market low. Going just real quick here, LAZ. Now it's a financial stock. I'm sure you don't follow it, but this is
this Lazard? Is this Lazard?
Yes, it is.
Okay.
Yeah. Man, this is like Rob Hood pops in all the time.
By the way, I'm putting these up if you want to look at these. Yeah.
Yep. Go to a daily on this one.
That should be a daily. Yeah, that's a daily.
Okay. Something's going on at 38 here, right? Where are we trading at? We're trading down 38 cents. But to me, Rob Hood, when I look at this one, you had a high at 38.99. You had a high at 38.91. Today's high is not near that area. So there's someone at the point there. It's a New York stock. I don't have an open book open here to look at it. But to me, they got to clear out that seller at 39 here. It's a very extended run from 34 to 39. If you're thinking of shorting, the issue at the 38.50 level, be using, 39 as a stop, but shorting it here, definitely going against the trend. S&P's rebounding off that pre-market low, trying to go unchanged on the session. So here we go. Well, unchanged is 72 even. Not as really significant. So if you traded through a number so many times, it definitely does lose its significance during the day. CYBR, see, here's the thing with a stock like that. Like even
let's go back to cyber.
Yeah, it ripped. It went down. It had that 4-point drop. And then, see, that's the thing. Like if you shorted something like that, where you bringing it in? I mean, if you're waiting for a gap fill, boom, you're not going to get that. But here you are. You just hit 120, 119.99. And when before you were on the show, someone had asked about it. And I said, if you're really patient, you're really holding out for a target in this one today. I was looking at 120 to 121.5. I was a little bit higher than you because of the just of the daily charts. Spinner,
You got, like I say, there's almost a natural pull possibly to 121, 50 to 122.
Yeah, yep. And shorts are squirming in this one. Spinner is observing. Oh, and here's a stock we've talked about a lot. Spinner is seeing some call buying in Zscaler. Perhaps.
Oh boy.
Yeah. This thing is sleepy.
My former favorite short, and man, did this one pay nice and multiple times. I'm not short it here. I don't think I'd be short it into this print, but that's just me.
Okay, when Sean says print, he's talking about the next earnings report.
Correct.
And the next, because we got to do a lingo show. Now this one, they're on a little bit of different reporting scale. They reported in September, so they do not report until December 3rd.
Yeah, they're a late reporter.
Yeah, they're a late reporter here. So we'll see. I mean, I agree. I couldn't be short this one. And what are you doing here? It looks like someone wants to push this through. I see 45.58 was a high on October 30th. You just made a high at 45.64. So, maybe better off trying to buy this one on a 46.25 buy stop than trying to pick it here and maybe get some momentum off that. Go ahead.
Joel, I just put up Tenable. So Tenable, now much cheaper stock.
Symbol.
TENB.
Okay.
This is kind of, ZS could do something like this. See what they did post earnings. I mean, really, really big gap, but it's pretty much faded. It's almost, to be honest, it's getting somewhat attractive to me personally. But this is what a
23. Would you wait?
Oh, go ahead. You're cutting out a little bit. Go ahead.
Sorry. Would you wait for it to come down and fill the gap here, or would you start nibbling in the gap here?
Honestly, another 50 cents lower, I might take like a partial, like a 1/4, 1/3. I wouldn't want to. I would be more comfortable taking a larger position if it did fill the gap. But yeah, no, I mean, I like that fade. They had a gorgeous report, but I wouldn't be surprised if Zscaler did something like this, like a big pop on a number that people feel pretty good about, and then it just sort of, has a. I mean, this is like, is it a 20? It's like a 15% fade. Hey, you can make money waiting for a 15% fade. By the way, can we go back to Lazard real quick?
Sure.
I just want to show people something. So one, if you draw a trend line, you might have a trend line break coming. But this is another one of my things. Everybody thinks I'm a bottom knife catcher. It's not really true. I like value. I'll buy a stock at the bottom. I mean, I don't really care where a stock is on a chart if my fundamentals support it. But this is one of my oldest rules. Okay, look at the weekly. Stock's pretty low on the weekly, almost at a 52-week high on the daily. That's kind of one of my favorite setups, to be honest. I don't know this name nearly as well as I used to. I think I quit researching this stock around 2013 and 14, but I know the business. It's a consistent business, investment bank, money management, blah blah blah. But if you pull it, if you just expand the time frame, look at a weekly, it looks a lot more attractive, right?
That's a great point here, and I think that's something that I'm more prone to do, like on the weekends and stuff. Like you look at a chart like GE, and I did talk about.
Ooh, let's pull up GE.
Yeah. I'd love to hear what you think. And you're thinking, whew.
I'm bullish. I own some.
Really?
Yeah.
Why do you own GE?
The most basic premise is I think it's worth $20 and it's selling at 10, and that's the most basic premise. But honestly, I don't mind this chart.
Why is it worth $20?
Well, I think $20 is probably conservative. That's that's probably a sum of the parts valuation on it. I think once they kind of get out of this massive bear trap / raid kind of period they're in. I mean, but put it this way. Remember years ago, we used to talk about Twitter, and I said, look, all Twitter has to do is have 2 or 3 quarters in a row where they don't miss and the stock can double or triple. That's kind of what it did. I think GE is kind of like that now. Like at this point, as long as they just don't miss badly and they have in line to slightly positive reports for, let's say, 2 or 3 quarters in a row, which I don't think that's that crazy of a notion given how much they've cleared the deck now. So, you know, I think an easy move here, where's the 5-year again?
Go to the monthly here. No, it's right. I mean, like 11.
I mean, you got a pretty easy move. You don't even have any resistance at all to like 13 to 15. So, I mean, this thing could go up 30% and everybody's still going to hate it. I mean, I can make money on 30%. Anyway, I'm not saying I love this, but it's a minor long. I'd rather buy GE with fresh money at 1050 or 1060 than buy Apple at 247 or 248. So, you know, it's all about allocating dollars. But here's another one. You know, it looks like it's had a big move, and it has had a pretty big move percentage wise. Again, you pull this thing out to like a weekly chart or a monthly chart. You just have to realize this stock may never be the company it was. Like, well, I don't know, you know, wasn't this a $500 billion market cap company in 99 or 2000? It's probably never going to be that again, but it doesn't mean it can't be a 15 or 20 or $22 stock or something. But yeah, I don't have a lot of money. It's kind of like, you know, Dennis talks about positions that he owns. You know, one of his 100 stocks he owns. This is sort of more in that camp. But I have there's no reason for me to sell this until, I don't know, 16, 17, 18, if not higher.
Yeah, and it's just something that you just don't worry about, right?
Yeah. You know, if you buy it cheap enough, you don't have to worry about it. Now, I do say I like the Lazard setup better. Again, you get a 52-week high on the daily chart, but it's still a very cheap stock on a weekly chart. Those can be pretty powerful setups.
All right, S&Ps getting off the mat here. As I said, we matched the pre-market low. We've come up one time to test the close, and the last bar, we just got a little bit through it here. So if you're looking for continued update here, and next level is clearing the close at 30.72, at least holding it here on the next 15-minute bracket, but still trading, still finding sellers at that close from yesterday. That represents the second all-time highest close in the S&P 500 futures. Let's just talk here. Apple real quick. We got about 7 minutes left. Apple's trading down 33 cents here. You know, I mean, I tried to short it after the report and I got my face ripped off. I thought it, you know, was going to go, but what do you like? To me here, it's starting to bunch up. It's starting to have tighter ranges here. The last couple days, the all-time high, someone's definitely targeting 258. You had a 57.85 high on Monday, 58.19 on Tuesday. So far, 57.49, and all the two lows here right now, you're holding the 256 area. So to me, when I look at this chart is, you know, you had the big bar after earnings. You have continued, but things are tightening up here. Talk to us about how you make use of consolidations. I mean, everyone likes to see the big rips and the big dips and everything, but I like to talk about consolidation phases being very important as well. Tell us about how you.
I think consolidation phases are hugely important. I'm trying to think of a stock. Apple wouldn't be. I'm trying to think of a stock that would fit a consolidation pattern right now. It's not coming. Here's what I'm observing on Apple, though. By the way, I didn't set this up. I've had these lines drawn on this program for a lot. See my two trend lines on Apple? Upward rising. One is around 180. One's about 210-ish.
Right.
historically, these trend lines have worked very well. So obviously, the higher Apple is above that band, the more risky it is.
Yep.
When it's at the bottom or below that band, it's usually been a pretty good buy. I will short Apple, but I don't know if I'm going to short it. Like, it could be the third week of December that I short Apple. You know, sometimes stocks move just on headline things like the new earbuds and stuff. Yeah, the earbud sales are good. They have the new ones. They're $250. Everybody bought a ton of the $150 ones. By the way, I'm not a big fan of the $250 ones. I think Zag makes a product that is very similar for $59 or $69. So we'll just have to see. But this is looking kind of toppy. I mean, this is just,
that's what I said at 245, but
yeah.
Anyways, just following up on a couple stocks that we did cover on the pre-market prep show. So far, CYBR, that 119.99, 120, has held up before. Held up, so there's the area. We'll see a lot of times too, like if this thing was going to keep ripping, a lot of times you see that action in the first 15 minutes, a half hour. Nike, a big fade off that analyst initiation at a buy, opened up at the high for the session. I was talking about unchanged as a target, and it's done better than unchanged here, down 24 cents at 89.64. So the little analyst fade there for Nike. Still, what was yesterday's low? All right, look at that, 89.50. 89.54 was yesterday's low. You've gone 89.47. 89 evens your 4-day low. 89.32, a little low in that area as well here. Also, if you're looking at like the average daily range and something, I bet you it's a little bit over $1 here in Nike, but so far $1.25 range. And a lot of times you see that, the range in a stock be developed pretty early. S&P's coming back here, making another shot at unchanged. Robhood brings in a stock as an example of SANM, I think. What is that? A stock? No, there's no.
Sanmina. Do they report? By the way, I don't have. I think you turned off the share thing. So
did I turn off the share thing?
Yeah. Well, I don't know. It went away. But okay. You can put it up. Sanmina. I'm not sure if they were reporting today or not. They might have been. That's like an EMS company. They do a lot of manufacturing for tech.
Good. We might have to put you. We might have to put you on our hot potato segment. Have we?
Hey, I mean, Sanmina, Vishay. There's not too many areas of tech I don't have at least a working knowledge of. But
that's pretty good there, man. The tech stock.
So tell me, Sanmina, is it up or down? I have no clue.
It's down. I don't know if Robhood, we were asking about definitely not consolidating. I mean, this one, it's only down 20 cents. I'm not sure why he mentioned it, but boy, someone wants out around, let's see where all these highs here, man, lower price stock. 33 looks to see like a brick wall to me. I see some highs, 32.73, 32.79, then a couple above 33 here. So, and also going back on the monthlies, I see resistance here at 33. So Robhood, if you're looking for another leg up here, you got to clear 33 in this one. 2 minutes left here, Sean. I'm just going to give a quick recap here. We are going green now here on the trine here, right back to the close, hanging up here. Pre-market low, we matched that, only went another tick here. So let's see what happens at the pre-market high today, 77.25. In order to make a new all-time closing high, you need to be above 75.75. Sean, any other final comments for today? Anything popping up on your radar that our traders, investors should keep an eye on?
Well, I'm watching cars, small, long. It looks to me like that a pretty good report, probably a little bit flat. That was the last chart I was going to show. It looks like
you can
that's okay. We're off here in a sec, but that had a pretty nice consolidation at a very crazy low price. They've had some major good news as of late, and again, looked like the quarter was better. I mean, that's a stock. That's just not a value stock. That's like a deep value stock. I'm trying. Pinterest is probably my newest sort of favorite growth name. That's PINS.
Yep.
I've owned. I think this is the third time I've owned it. First two went well.
Wow.
Pardon?
You must be getting in and out of that thing because it. I mean, it's been.
Yeah, I think the first time I bought it was 23 to 24. Very, very soon after the IPO.
Okay.
Caught a few points, but I don't know, probably 5 or 6, and then I caught a run in from like kind of low to mid 20s into, I want to say 30-ish. And then this one was kind of easy to like avoid. I didn't avoid the post earnings drop because I had some pre-print, but they had a big IPO lockup. So I basically cleared out of it. My plan was to start nibbling back in post IPO lockup. They had a great, it was like 100, I think it was 75 million shares, which is a big lockup, as you know. So anyway, so I started nibbling at post lockup. They went, I actually liked their quarter. It wasn't a glorious clean beat. I think they missed by 1 million, but 47% growth over prior year. I don't mind a company that misses by 1 million and has 47% growth over prior year.
Real quick,
So,
we're gonna let you go
ahead.
after this. Uber.
Well, I've been negative on Uber pretty much the whole time. I do like Lyft. In fact, I think a great pair trade is long Lyft, short Uber. Although I don't know if I'd short Uber now because it's dropped a ton, but they're in the throes of their lockup expiry right now.
Today.
Yeah. So at the same time, sometimes you get a lot of the selling. I mean, if this thing has been preloaded for the lockup, I mean, I don't know. You tell me, is it 85, 90% done? I think it's a high percent of the damage has been done to Uber. I don't really like it though, but I'd be surprised if it goes under 25 bucks. Yeah. And by the way, I'm not even looking at it. I have no idea what it's trading at right now, but I would be, my guess is probably 26.50 without here. Let me look.
25 made a 25.58 low off the open, opened 26.06 and then came back through it. Okay. We're gonna wrap this up, folks. I would love to get your feedback here. You can email me, joel@benzinga.com. If you want more of Sean's information, you can go to the udallreport.com and follow some of his stuff. But Sean, I knew it was going to be good. It was fun. And,
always.
Yep, we'll plan it again. Thanks for your time. We'll plan it again for next Wednesday.
All right, take care. See you then.